Welcome back to the second half of the Futures Show. We're less than 60 minutes away from the cash open for stocks on Wall Street. Futures are still suggesting a higher open this Monday to continue the rally back we saw Friday afternoon. Let's talk financials with Scott Bauer, the CEO of Prosper Trading Academy, is joining us this Monday morning to help us do just that. Scott, welcome. I wanted to thanks to you, Scott. I wanted to get your thoughts on the dollar coming off recent highs as rates and, Treasury's rallying. I mean, this is interesting.
It's very interesting, and I think what you're seeing here, Ben, is the rest of the world now starting to catch up a little bit, and that's no more prominent than the news that came out of the European zone this morning and Christine Lagarde. And finally, they're I don't want to say they're throwing the towel in, but that policy that they have held on to of close to zero interest rates, they're now saying, all right, we've got to give in. We've got to raise rates. So now maybe you're going to start to see that in other parts also, like in Asia, like maybe with the Aussie, New Zealand. So I think that's a little pressure on the dollar because, quite frankly, for the last weeks, months, the dollar has been, has had major tailwinds because of the rates going on here and other central banks not really coming to the forefront and raising rates. So you're seeing a little pressure right there, but I wouldn't throw the dollar out yet, not at all.
No, I like that, though, Scott. A great breakdown in terms of what we're seeing here. The dollar really was uncontested in many ways in that run up to 105. But to your point, again, last week, I think it was German PPI came in up above 33% year over year. I mean, you can understand why the ECB is going to have to get a little bit more hawkish in the near future. And I like how you said, again, in theory, this could be an indication of what to expect from some of the central bankers in Asia.
Absolutely. I don't see how there's really any big central bank here that can't be thinking, all right, we do have to consider raising rates. It's a global phenomenon right now. Yeah. So, again, I think the dollar was the only game in town. It still is absolutely the leader. I'd be buying it on any weakness here, Ben.
Scott, in terms of central bank activity, you've got the RBNZ this week, and we also have the Fed minutes.
Absolutely, and I think the RBNZ, New Zealand, they're going to get aggressive also.
Okay.
They're so tied, them and Australia, they're so tied to what happens in China here, and maybe with some of the lockdowns easing a little bit, at least what we see, in the news here, maybe that is portending that, okay, economic activity is going to pick up a little bit in China, which, obviously would flow through to New Zealand, to Australia, and maybe it's time for them to get into gear also with raising rates.
Scott, as talk about recession increases, stagflation, recession, I mean, maybe this is why the dollar's easing off here a little bit as well. I've been kind of hearing that we can shelve some of those recession concerns as long as we don't see wage increases start to falter, unemployment start to increase. Ultimately, that's what we should be watching here in terms of the canary in the coal mine.
Yes, and you have to look historically. You have to look at the data going back for 100 years and what has caused a recession. What metrics do people follow when saying that we are officially in a recession? And I think the latest stats I saw is now there's a 60 to 65% chance that we will fall into recession. All signs are certainly pointing to it, Ben, but if it happens, and I think it's when it happens, not if, it's still probably 12 to 18 months away. That doesn't mean that we can just discount that, poo-poo it, and say, we don't have to worry about it yet. But I don't see how we avoid it. I really don't.
Talk to us about rates in addition to the dollar coming off recent spike highs. The 30-year got up to and through 3.25%. The 10-year has been hanging around 3% here, just below it last I looked. Currently, well below it now that I look at 2.83. What are you expecting? Should they, if the dollar is a buy the dip scenario, do you think rates are going to continue to remain elevated?
They have to be, Ben. They absolutely have to be. Does that mean the 10-year is going up, higher than 3% or 3.20? Maybe not, but certainly the bias is to the upside. I see this morning that the 210 is narrowing a bit also. There's some pressure to the upside on the 2% or on the 2-year, excuse me. I think that rates are absolutely steadied here. and biased to the upside. I just don't see how we're going to see any sort of reduction. Even if you look at last week with the turmoil in the marketplace, and maybe it was a flight to safety a little bit. I'm not saying it was the capitulation by any chance that everybody was looking for, but maybe a flight to safety where we saw equities sell off and we saw rates actually come down. I don't see them going down much further in the near term here.
I'd agree. It seems like rather than sentiment or any real shift in terms of what we've seen as far as data or expectations, it did seem like Treasuries rallying a little bit is what kind of was focused. Obviously the behind the move lower in rates, but that seemed to come more from traders kind of buying into that sort of safe haven type tendency that we hadn't really seen play out. For the most part, Treasuries weren't the recipient of. Speaking of, and to that point, and kind of shifting back to the currencies discussion, the yen also is getting a little bit of a lift as of recent, maybe kind of mirroring or in very many ways similar to what we saw in terms of Treasuries in the bid over the last couple weeks.
Absolutely. But, again, the yen, the euro, they had been so beaten up.
Yeah.
And it was really a function of their economies and their central banks not doing anything and the dollar just being the only place to go. So I think you're seeing a little steadying of that right now. This may be a little bit of short covering, quite frankly, in both the yen and the euro. I'm not convinced that the rallies either place there are going to continue.
Scott, talk to us about Bitcoin. It's managed to hold on to key support and not really getting impacted this much by some comments. Last I looked, up around 4% here. Lagarde called it trash.
Well, I think that Bitcoin and the people that invest in it, the people that are holding it, they don't pay any attention to Lagarde or Buffett or anyone that's calling it, what it may be. It is hanging by a thread, though. Let's call a spade here. It is hanging by a thread, and it is hanging in the background, if you will, of what's going on with risk off in the equity markets. And the bottom line has been this thing has traded for the past 9 months or so, almost lockstep with the NASDAQ. And so as the NASDAQ goes, at least for now, that's how Bitcoin is going to trade. Throw out any of the talk that we've, talked about over years and years about an inflation hedge or anything. It is absolutely almost a proxy for the NASDAQ at this point.
And in terms of it hanging on an edge or by a thread, take a look here. You can see, again, that key support area. Scott, you can understand why. I mean, you got Biden, some interesting comments over the weekend in his visit to Japan, talking about how the U.S. would defend Taiwan should China invade. You have Davos, we mentioned earlier, busy week with the Fed minutes. You've got the ongoing war in Ukraine, and now this whole situation with monkeypox. I mean, as you look at the headlines, again, I'm kind of on edge and hanging by a thread here as well. I can understand why Bitcoin investors are on broader base investors are as well generally.
I mean, in terms of sentiment, it is really hard to be positive right now. Not just about Bitcoin, but really about any asset class out there. And so, Bitcoin and cryptocurrency, when you compare it to every other tradable asset class out there, it's the last to the game and probably the first to get thrown out. So I think it is hanging by a thread. It has the most risk, I think, of any of the asset classes out there right now. Maybe that means it also has the most upside also, if things start to turn around. But that certainly doesn't see, in my magic 8-ball, certainly doesn't seem to be what's going to play out here in the near term. In that magic 8-ball and in terms of upside and where you're seeing some, Scott, I want to get your thoughts in terms of last question, and then we'll let you get out of here because it is very hard to be positive right now. But it is always darkest before the dawn, I've heard and seen in the past. So where do you see some of that opportunity lie? Is it just kind of in some of the existing trends we've seen? For example, crude oil, energy markets, which have remained supported, the U.S. dollar, as you mentioned, you expect that to continue. Where are some of the opportunities that lie right now in this environment, as you mentioned, where it is very difficult to be positive? So there's no easy trade out there. There's never an easy trade, but certainly at the energy space would be one that people would feel most confident in right now. That maybe is the safest, very short term, but I'll be honest with you, Ben, I really like some of these really beaten up semis even with all the dire news that's out there. I know NVIDIA reports this week. I'm a buyer of NVIDIA on any dip. In fact, I may dip my toes in before the report. I love Micron. I think, I certainly wouldn't go 100% allocation. That's an area, though, that I think if you've got a timeline that you can say 6, 9, 12 months, not necessarily as a trade, but longer term, that's certainly a place that I got to start dipping my toes.
NVIDIA back to 160 off of that 346 high. So Scott will continue to keep an eye on some of these names. Micron as well, you mentioned. Scott Bauer, the CEO of Prosper Trading Academy. Always a pleasure to have you on, and a great breakdown to begin the week talking financial markets.